Welcome to the deep dive.
Ah.
Today, we're going to be taking a look at one of the giants of
Yeah,
the stock market.
absolutely.
Amazon. You sent us a really thought-provoking article from the Motley Fool
Hmm.
about whether it's still a good investment,
Right.
especially with its current price.
Yeah.
So let's unpack that together.
It's a fascinating question,
It is.
especially because the article claims Amazon stock could hit $300 in the next 2 years.
That's a pretty bold prediction.
Yeah.
The Motley Fool, by the way,
Huh?
did you know they take their name from Shakespeare?
I did not.
Like the wise fool in as you like
Yeah.
who speaks truth to power.
Oh, okay.
Yeah.
A fitting namesake for a publication analyzing the financial world.
Yeah.
But speaking of big names,
Yeah.
the article mentions that Berkshire Hathaway,
Mm-hmm.
that's Warren Buffett's company,
Right?
has held Amazon stock since 2019.
No, that definitely gets my attention.
Yeah.
Makes you wonder what a legendary investor like Buffett sees in Amazon, right?
It's not a guarantee of future success,
Right.
but it's definitely a signal worth exploring,
For sure.
especially when you consider Amazon's current scale.
Yeah.
We're talking about a company with $620 billion in trailing revenue,
Okay.
which means the total revenue generated over the past 12 months,
Okay.
millions of Prime members,
Right.
and a dominant position in cloud services with AWS.
Okay. So they're huge EE.
Mm-hmm.
But something I noticed in the article,
Okay.
and I'm sure a lot of people wonder about this,
Uh-huh.
Amazon's stock price seems really high.
Right.
Like scarily high,
Yeah.
especially with a PE ratio of 45.
Yeah, that's pretty high.
I think it would be really helpful for our listener if you
Ah.
break down what that actually means.
Of course. The PE ratio,
Okay.
or price to earnings ratio,
Mhm.
tells us how much investors are willing to pay for each dollar of a company's earnings.
Okay.
So in Amazon's case,
Right.
a PE of 45 indicates that investors are paying $45 for every $1 of earnings the company generates.
So a high PE like that,
Mm-hmm.
does that usually mean a stock is riskier?
It's one way to interpret it.
Okay.
A high PE can signal that investors are very optimistic about a company's future prospects
Okay.
and are willing to pay a premium for the stock.
Gotcha.
But it also means that the stock price is sensitive to any changes in those expectations.
Right.
If the company doesn't meet those high growth expectations,
Yeah.
the stock price could drop significantly.
That makes sense.
Yeah.
So how does Amazon's recent performance stack up against those expectations?
Well, their Q3 results were quite impressive.
Oh, wow.
They reported 11% year-over-year revenue growth
Okay.
and a 54% jump in net income,
What?
which is their profit after all expenses are paid.
Wow, 54%.
Yeah.
That's a huge increase in profit.
Mm-hmm.
So even with a high stock price,
Right.
they're still managing to grow earnings rapidly.
Exactly.
But how are they doing that?
Uh,
Especially when they're involved in so many different areas.
right.
Online retail, cloud computing, even grocery stores and advertising.
Uh-huh.
It seems like they'd be spread pretty thin.
You'd think so, wouldn't you?
I would, yeah.
But one of the things the article highlights is Amazon's strategic focus
Okay.
on improving fulfillment efficiency
Right.
and speeding up delivery times.
Makes sense.
They're literally tackling costs head on to boost profits.
And I'm guessing faster deliveries also translate to happier customers,
Absolutely.
which can lead to more sales. I'm
Right.
actually curious.
Yeah,
How are they actually making deliveries faster and more efficient?
it is.
That seems like a logistical nightmare.
It is.
Yeah.
But they're investing heavily in technology and infrastructure.
Okay.
The article mentions they're restructuring their fulfillment network
Right.
to optimize inventory placement and shipping routes.
Okay.
Essentially, they're trying to get products closer to customers
I see.
before they even click buy.
That's smart.
There's even a quote from Andy Jassy,
Oh, wow.
Amazon's CEO,
Okay.
saying they're obsessed with improving the customer experience while driving down costs.
Okay, so it sounds like they're not just sitting back and relying on their size.
Right.
They're actively innovating to improve their operations.
Yeah,
That's a bit reassuring considering they're already massive scale.
exactly. And it's a key factor to watch
Mm-hmm.
because if they can successfully manage these costs
Right.
as they continue to grow,
Mm-hmm.
their profitability could skyrocket,
Okay.
which would justify that high PE ratio.
Makes sense.
Yeah.
But we've been so focused on the retail side of Amazon.
Right.
What about their other ventures,
Mhm.
like AWS, their cloud computing platform?
Uh-huh.
How does that play into their overall stock potential?
That's a great question.
Yeah.
And it's a crucial piece of the puzzle
Okay.
when we're trying to assess Amazon's future.
Yeah.
Because while retail is still their biggest revenue generator,
Right.
AWS is actually considered one of their most profitable
Interesting.
and fastest growing segments. It's a huge part of what analysts are looking at when they project Amazon's future earnings.
So maybe we need to shift gears a bit.
I think that's a great idea.
And look at how AWS compares to other players in the cloud computing market.
Yeah.
Because if AWS is really that dominant and profitable, it could be a huge driver of Amazon's stock price.
For sure.
All right, so next up, we're
Okay.
going to deep dive into the world of cloud computing and e-commerce,
Sounds good.
comparing Amazon to its biggest rivals.
Yeah.
It'll be interesting to see how they measure up
Mm-hmm.
and what that could mean for their stock in the long run.
Absolutely.
Okay, so we're back.
Yeah.
And we're ready to dive into the competitive landscape for Amazon.
Right.
Because as impressive as their scale and innovation are,
Uh-huh.
they're definitely not operating in a vacuum.
Exactly.
Yeah.
And to really grasp Amazon's potential,
Right.
we need to understand where they stand in relation to their rivals.
Yeah.
So let's start with AWS.
Okay.
Their cloud computing arm.
Oh.
It's a market where they've been a dominant force,
Right.
but they're facing some serious competition these days.
I was just reading about how Microsoft Azure and Google Cloud are really gaining ground.
Uh-huh.
Are they actually threatening Amazon's lead in the cloud?
It's definitely a tighter race than it used to be.
Okay.
Microsoft, in particular,
Yeah.
has been leveraging its strong relationships with enterprise customers.
Right.
You know, those
Yeah.
big corporations that rely on cloud services for everything.
Uh-huh.
And Google, well,
Yeah.
they're Google.
Right.
They've got massive data centers
Mm-hmm.
and a reputation for cutting-edge tech.
So it's not a guaranteed win for Amazon anymore.
Right.
What are they doing to stay ahead in this cloud war?
They're definitely not standing still.
Okay.
One of their key strategies
Yeah.
is focusing on offering a wider range of services.
Okay.
Think machine learning,
Uh-huh.
artificial intelligence,
Right.
and data analytics.
Right.
They're trying to become a one-stop shop for all things cloud-related.
That makes sense.
Yeah.
It's like they're trying to build an entire ecosystem within the cloud,
Mm-hmm.
so companies never have to go anywhere else.
Right.
But what about the retail side?
Yeah.
How are they holding up against the likes of Walmart and Shopify?
The e-commerce landscape is constantly evolving.
Yeah.
And Amazon's definitely facing some heat there, too.
Hey.
Walmart, for example,
Mhm.
has been investing heavily in its online presence
Okay.
and leveraging its huge network of physical stores for things like curbside pickup and same-day delivery.
Yeah. I've actually been using Walmart's curbside pickup a lot lately. It's
Yeah.
super convenient.
It is.
And what about Shopify?
Shopify,
Yeah.
they're more focused on helping smaller businesses sell online, right? Exactly.
Yeah.
Shopify's platform makes it easy for anyone to set up an online store,
Mm-hmm.
and they've been incredibly successful
Okay.
at attracting small, medium-sized businesses.
Right.
They're kind of like the anti-Amazon in a way,
Yeah.
empowering the little guy instead of trying to be everything to everyone.
So it sounds like Amazon is facing some pretty stiff competition on both fronts,
Mm-hmm.
but they still seem to be holding their own.
Yeah.
What does all this competition mean for their stock price?
Yes, the million-dollar question.
Yeah.
Competition is definitely a factor investors consider when evaluating a company's stock.
Okay.
A highly competitive market
Mm-hmm.
can put pressure on profit margins
Right.
and limit growth potential.
So if Amazon starts losing ground to its competitors,
Mm-hmm.
that could send their stock price tumbling.
Potentially, yes.
Yeah.
But it's not a simple equation.
Okay.
Remember, stock prices are also influenced by a whole bunch of other factors,
Right.
like overall market sentiment,
Mm-hmm.
interest rates,
Mm-hmm.
and even geopolitical events.
Okay, so there's a lot of uncertainty in the mix.
Yeah.
But we can't forget that the article we're analyzing
Right.
predicted Amazon stock could reach $300 within the next 2 years.
Yeah.
How does that prediction line up with what we've been discussing about their competitive landscape and potential risks?
Well, I think it's important to remember
Okay.
that any stock price prediction is just that,
Yeah.
a prediction.
Right.
There's no crystal ball,
Mm-hmm.
and analysts can be wrong.
Yeah, for sure.
That being said,
Ah.
the $300 price target
Yeah.
does suggest a lot of confidence in Amazon's ability to navigate these challenges
Right.
and continue growing its earnings.
So if they can keep innovating,
Yeah.
streamline their operations,
Mhm.
and effectively compete in both cloud computing and e-commerce,
Right.
that $300 price tag might not be so far-fetched.
Exactly.
Yeah.
But to understand that potential,
Okay.
we need to dig a little deeper into how Wall Street actually values a company like Amazon.
All right.
It's not just about the PE ratio.
You're right.
There are other metrics and factors at play
Uh-huh.
that can give us a more complete picture
Mm-hmm.
of whether a stock is truly undervalued
Right.
or overpriced.
Okay, this is where I start to get a little lost in the weeds.
Sure.
Maybe you can break down some of those other valuation methods.
Absolutely.
Yeah.
How they apply to Amazon.
Let's jump right in. All right, so let's talk about these other valuation methods.
Okay.
Because I think a lot of people, myself included,
Yeah.
tend to get fixated on the PE ratio
Sure.
without considering the bigger picture.
It's definitely a common starting point,
Yeah.
but it's important to remember that no single metric tells the whole story.
Right.
One method analysts use
Okay.
is the price-to-sales ratio,
Okay.
or PS ratio.
Mm-hmm.
It compares a company's market capitalization,
Right.
basically the total value of all its outstanding shares,
Gotcha.
to its annual revenue.
Okay, so instead of looking at earnings, it's looking at revenue.
Exactly.
What's the advantage of that?
Well, it can be particularly useful for companies
Okay.
that are rapidly growing their revenue,
Mm.
but might not yet be super profitable.
Huh.
Like, remember how we talked about Amazon investing heavily in new ventures
Right.
and focusing on long-term growth?
Right. They're not afraid to spend money to expand into new markets.
Exactly.
Yeah.
So their earnings might not reflect their full potential just yet.
Okay.
The PS ratio can help account for that
Right.
by focusing on their top-line growth.
Okay.
It gives you a sense of how much investors are willing to pay
Mm-hmm.
for each dollar of sales the company generates.
That makes sense.
Yeah.
So a higher PS ratio would suggest that investors are expecting strong revenue growth in the future.
Precisely.
Okay.
But it's also important to consider the industry average.
Right.
A high PS ratio might be normal for a fast-growing tech company like Amazon,
Yeah.
but it could be a red flag for a company in a more mature industry.
Okay, so context is key.
Right.
We can't just look at these numbers in isolation.
Exactly.
Are there any other valuation methods that we should be aware of?
Absolutely.
Okay.
Another one analysts often use
Yeah.
is discounted cash flow.
Or DCF analysis. It's a bit more complex.
All right.
But essentially, it tries to estimate the present value of a company's future cash flows.
Okay, hold on. Let's back up a bit.
Sure.
What exactly are cash flows?
Yeah.
I always hear that term thrown around,
Right.
but I'm not sure I fully grasp it.
It's basically the money a company generates from its operations,
Okay.
minus its expenses.
Right.
Think of it as the actual cash a business has on hand to reinvest in growth,
Okay.
pay dividends,
Uh-huh.
or reduce debt.
So DCS analysis is trying to predict how much cash a company will generate in the future
Yeah.
and then figure out what that future cash is worth today.
That's the gist of it.
Great.
It takes into account things like projected revenue growth,
Oh.
profit margins,
Right.
and the cost of capital.
Sounds complicated.
It might be.
But I guess the idea is that if a company's future cash flows are expected to be really strong, its present values should be high.
Which would justify a higher stock price.
Exactly.
Okay.
DCF analysis can be a powerful tool for assessing a company's long-term intrinsic value.
Okay.
But it does rely on a lot of assumptions about the future,
Right.
which can make it prone to error.
Okay, so it's not a foolproof method,
No.
but it's another piece of the puzzle when trying to understand a company's value.
Exactly.
So putting it all together, the P/L ratio, the PS ratio, DCF analysis.
Right.
Do these methods give us any clues as to whether the Motley Fool's $300 prediction for Amazon is realistic?
It's tough to say for sure.
Yeah.
Remember, stock prices are influenced by a multitude of factors,
Right.
including investor sentiment, market trends, and broader economic conditions.
Of course.
But these valuation methods can help us make more informed judgments.
So if we see that Amazon's PS ratio and DCF analysis are both pointing to a significantly higher intrinsic value
Yeah.
than its current stock price, that could be a sign that the stock is undervalued and has room to grow.
That's one way to interpret it.
Okay.
It suggests that the market might not be fully pricing in Amazon's future growth potential.
Right.
Of course, the opposite could be true as well.
Right.
If these metrics suggest that the stock is overvalued,
Yeah.
it might be a signal to proceed with caution.
Okay, so it's not just about blindly following predictions.
Right.
Or relying on a single metric.
Exactly.
It's about digging into the data, understanding the company's strategy,
Yeah.
and weighing the potential risks and rewards. That's a lot to consider.
It is.
And that's why we do these deep dives.
Exactly.
To help equip you, our listener, with the knowledge and tools to make smarter investment decisions.
Absolutely.
We're not giving financial advice,
Right.
but we are providing context and insights to empower you to think critically and make your own informed choices.
That's what we're here for.
So as we wrap up our deep dive into Amazon, we want to leave you with one final thought to ponder.
Okay.
We've talked a lot about their competitive landscape, the cloud wars, the rise of e-commerce challengers. But think about the impact Amazon's strategies have had on other industries.
Yeah.
Their relentless focus on efficiency, their use of data and technology to optimize everything from logistics to customer experience.
Yeah.
Are there other sectors where you see similar trends emerging?
That's a great question.
And if so, what companies are positioned to be the winners in those spaces?
Those are great questions to explore.
Yeah.
Because understanding how innovation ripples across industries can be key to identifying the next Amazon, the next company that reshapes the market and potentially delivers outsized returns for investors.
So keep those questions in mind as you continue your investment journey.
Absolutely.
And remember, always do your research, stay curious,
Yeah.
and keep diving deep.
Keep learning.